Welcome to Real Life Trading. My name's Tony. I'm a full-time trader, and every week I make a video walking you through my game plan of what I'm going to do to navigate these crazy markets, help you make a little bit more money, and have a little bit more logic and reason behind your trading. Our mission here at Real Life Trading is to enrich lives, and that's why the majority of the stuff that we do is for free. So you can find links down below for free trading courses to teach you everything from day trading, swing trading, investing, mindset, whatever you are struggling with, you can find a free course down below to help you overcome that. We also have a vibrant trading community that you can see the links down below to join if you'd like to come trade live with us and earn while you learn. Let's dive into these charts. So what a gap down on SPY. The fact that we're taking out last week's low is incredibly strong. Gaps carry a lot of sentiment behind them. There's a lot of weight. There's a lot of momentum behind these gaps, and this one's got a lot behind it. So we are coming back into some support levels and some large option levels that we're going to want to pay attention to, because that very well could be the bouncing spot for this week. I expect this trend line to hold coming through 590 or so, and 590 is also sitting on a lot of put strikes. So this is going to be a very key level to watch, 590 this week. Let's see if we get down there, and let's see if these bulls start to bounce it back up. That's what I would imagine is going to happen, that we're going to get some type of retest back up into 595. We could even retest all the way back up into like 600 range. I'm not sure we're going to get that much higher than 600. It could. I'd be shocked if we did. We went a little bit higher than I expected last week before a dip came, and this could be somewhat of rinse and repeat. So just be aware of that. I would be expecting bears to be loading in through here. This gap is telling us which direction to go. Right? I don't need a strong bear move for me to go, wow, we are bearish. This gap is letting me know, hey, bulls are giving up some control. Now, we're going to see what's going to happen down into some of these key bull areas, but at the moment, the momentum short term is to the bear side. And so I would imagine that bounces are going to get met by more bear demand and push us back lower. So my game plan for this week is to start looking at where are potential areas that bears are going to step in and start riding some of that momentum down. Any of these EMAs coming back through here that are matching some resistances. So I love this 600 resistance because it's matching the 10 and the 20, which is usually a great spot for reversals to come. But it's also a massive resistance level with multiple touches in this area. I would love the markets to get up into this 600 area, and I will be looking to short them right back down and see if we can't get some sort of rotation back over. So again, the bulls should be stepping in around 590-ish. It could go lower. It might not get there. You've got to have some wiggle room here on these markets, but this is an area that should hold for the bulls. We'll see if we can get a bounce, and then this is an area that should hold for the bears. We should get a rotation back down. We might not quite make it up there. I mean, 596 is a really big level, and we might be hitting that and falling back lower. There's a chance that these bulls are just nowhere to be found here on this gap, and we blow right through 590. If this 590 level breaks here on SPY, this will continue to fall pretty sharply, I believe, all the way down into like the 584, all the way down into 575. So 575, you can kind of see here, is my key bull level. If the bulls start to give up 575, that is their last line of defense for right now until we start seeing long-term, I'm talking a few months worth of bear moves potentially in this market. So bulls really need to step in through here and hold these levels if they are going to regain some ground and get some more bull moves coming. I don't know if they will. I feel like this sharp move back up a few months ago, that was their chance to really show us their strength. Now it's just looking a little bit more double top, and we're getting these monstrous gaps. This is second Monday in a row that we're getting a large gap down. At some point, these bulls are going to start running for the hills, and it's going to have some sharp selling behind it. People love to buy the dips, but they are not aware of the situations that the markets are in. Whenever these markets have gone up this far, I mean, straight vertical for years, you are going to get a larger dip coming through before it gets bought up. And so all these little 3 or 5% retracements that have been getting bought up for years, at some point, those are going to break, and we're going to get our 20% retracement on the larger time frames. This is on a monthly time frame here on SPY. And so at some point, this is going to get brought back down, and your large term buy the dip players are going to come back in. So everyone's going to get smoked that's been buying the dip up here because they're like, trading's so simple. I figured it out. I understand how to trade now. All I have to do is just buy the dip every time the markets drop 2%. Yes, but be aware of the overall sentiment, because at some point, the larger time frame needs its retest as well. And so if you look here on a daily chart, you'll notice this S-curve pattern. It comes down and it gets bought up. It comes down and it gets bought up. It comes down and it gets bought up. And it just keeps coming around. You keep seeing this S-curve pattern. Well, if you zoom out to a larger time frame, you notice how we haven't had that S-curve pattern in quite a while. It was back in 2022 since we had the last S-curve pattern. This time frame is also going to do that same pattern. It's just a matter of when. And so if you can understand the overall sentiment and realizing, hey, we've gone a year and a half without any real S-curve, it's coming. We just don't know when. So this is where I start really being patient on a lot of these 3 to 5% dips and passing on them and just doing some day trades and catching some short-term momentum. But I'm not really in these markets very much overnight whenever we start getting super extended up here, because I know that that is most likely coming. It's just a matter of when. It could be another year and a half, and that's fine. I'll just keep kind of day trading the momentum and making my money, getting in and getting out, waiting for that to come. And by the way, I'll have some signs up here that I can short this and make some really good money on that, just like I did back in 2022. But I understand, hey, I don't want to just be buying the dip and expecting this to be bouncing every single time a dip comes, because of the overall sentiment of these markets. And so it's so important for you all to see the big picture and understand where we're actually at in these markets. And right now, we are extremely extended. So we have to be careful on buying these dips, especially right now, because the dip is fine until it doesn't bounce. This is where everyone's going to get caught off guard, and it's going to just wipe them out. And they're going to be like, why are the markets crashing? It's like, you've got to be aware of where the overall sentiment is, where we're sitting on the larger time frame, so that you're not going to be shocked when we do get a significant pullback. Again, I don't know if that's going to happen. I don't know if that's going to happen this week. I have no idea. The bulls will step in most likely until proven otherwise, once they fail to step in on their higher lows. But in my opinion, taking out 595 is a pretty strong break in the back for the bulls. So most likely we've got a little bit more coming down in, probably into the 580 to 575. I would not be shocked if we hit that range by the end of this week. So just be aware of that. And in fact, if you do get some setups, some bear setups, ride that momentum down. That's what I'm going to be looking at doing and making some money this week. All right, so let's dive into the Qs. The Qs are failing to make higher highs on these bounces. So kind of coming back up, coming back down. Bulls had their chance really to be strong, and this gap is breaking the backs of a lot of them. A lot of buy the dippers through here. This is where your bulls should have been, and they didn't come to play. So now that we've kind of walked through that sentiment, we notice here we are in an area where the bulls should buy. That was last week, and they did buy there. Now we're right back into that bull area. I would expect the bulls to try to hold this. If we start to break this now, which I believe we will based on the weakness of SPY, it's most likely coming back into some larger time frames, back into the 100, which brings like 504, 505 back into the picture here. And then we'll see if we can get some bouncing out of there. Again, momentum right now is to the bear side. So the bounces are most likely going to be met by even more bear demand and continue to push us lower for the next little bit. Again, get really good at understanding momentum. If you can do that, you're going to be on the right side of things. And so if this thing starts to bounce back up, I'm actually looking to short this when everyone else is going to be chasing this and possibly buying the bounce. Now, it doesn't mean that I will short this, but if I can get some sort of sentiment on a smaller time frame up in this level, I'm looking for a short, because the momentum is to the bear side at the moment. And if I'm wrong, again, trading is not about being right or wrong. Trading is about losing small, winning big. If I get in here, my risk is here and my reward would be here. That is a lot of win compared to a little bit of loss. I don't care if I'm wrong as long as I lose small. I'm not about being right. I'm all about just losing small when I'm wrong and setting myself up to win big when I'm right. So if this does decide to reverse and go bearish, I'm going to make a lot of money. My target will be down in probably more like 485. So it's more like get in here, stop there, targets down here. That is a lot of room for money and not that much room for money to be lost. And so I can lose small and I can win big, and that's my only job. Same thing to the bull side. If you wanted to go bullish on this, I would wait for it to hit around this 100 EMA around 505. Yeah, around 505. So if you're going to get in here, my stop would be here and my target would be probably up into this range here. It's a little bit harder. So again, lose small, win big scenario. This one's a little bit tougher because I don't know if we'll make it back up to 530. I kind of doubt that we will. I would say the target would need to be 520, and that's what's going to make this, it's more of like a 1-to-1 almost. It's not as appealing to me, but it is possible. And how you do that is you just go to a smaller time frame so that you can get a little bit tighter risk reward, and that way you can make your money on that and get that same situation. That's all trading is, my friend. It's just losing small, winning big. It's not about being right or wrong. If you want to take the bull move here, we talked about where the bulls should come in. I don't know if they will. I don't know if the bears are going to step in up here. It doesn't matter. The only thing I do know is if I'm wrong, I will lose small, and if I'm right, I will win big. When you have that perspective in trading, everything is so much easier because now the pressure is off of you of having to be correct. Your emotions come in so much because there's so much out of your control. You don't want to lose money, but yet you can't control if the markets go up or down. And that's what's driving the emotions of so many people in their trading. Whereas if you could just understand the truth is I don't need to be right. The only thing I need to do is lose small when I'm wrong and then win big when I'm right. That is it. And if I can do that, I'll make as much money as I ever want in trading, because half the time I'm going to be right and half the time I'll be wrong. And if half the time I'm wrong, I'm losing $100. And if the other half the time that I'm right, I'm making $300 to $500, math works, right? That's trading. So hopefully at least I've helped you to pick out some levels here that you can work with. You can understand why you might want to look bullish here and why you might want to look bearish here, so that you can have a better understanding of momentum and ride that momentum. Give yourself an even higher probability, maybe a 65% chance instead of a 50% chance, that you will be able to make lots of money and lose very small. So that was the breakdown of the markets. I hope you enjoyed them. I hope you can use these levels to help you in your trading, to be a little bit more prepared, to make some money, to have a little bit more sense of why you're doing what you're doing instead of just gut reactions and gut feels. Again, come check us out over at reallifetrading.com. The links are down below. If you would like to learn how to trade, we have free courses down below. If you'd like to come join our community, trade alongside of us, have access to me on a daily basis, message me, ask me questions, check out our trading communities. That's where you can do that and join a lot of like-minded people that are trying to learn how to trade, and post your trade, share everything, and celebrate together your journey so that you can become a consistently profitable trader. Love you guys. I'll see you next week.